Okay, we're ready to start. So good morning, everyone, and welcome to this webinar, part of our Policy in Practice Week here at the PLSA. My name is James Walsh. I'm Head of Membership Engagement at the PLSA, and it's a pleasure to welcome you all. We're talking today about governance, reporting, and growing requirements, help for trustees. And I must say, judging by some of the conversations I have with our members as I do, this whole area of reporting really is one where trustees and indeed professional staff as well need help. But fortunately, help is at hand. We've got Jess Williams and Nick Trinder, both here today from Phoenix Corporate Investment Services, and they're going to talk us through some of these issues, and particularly about how an investment-only platform can give trustees the data they need and help to tackle those reporting requirements. So just to briefly introduce our speakers, Jess Williams is Head of Corporate Investment Services at Phoenix, and Nick Trinder is Relationship Manager also at Phoenix CIS. So it's very good to have them both with us today. The plan for today is Jess and Nick have got a few slides. They're going to do a sort of double-handed presentation, passing back and forth between them. We've got a couple of polling questions that I'll put to you at the appropriate moment, so get ready for those. We'll have plenty of time at the end for Q&A, but also if you've got questions that occur to you, type them straight into the Q&A box. Don't wait for later in the session, because I'll be watching that and I'll pick up any timely questions, appropriate questions, and put them to our speakers mid-presentation, sort of dot them in as and when we go. So let's have your questions or comments in the chat as well. So that's the plan. We'll finish at 11:45, and first of all, we're going to kick off with Jess, who's going to get us going. Jess, I'm going to pass over to you.
Lovely. Thank you so much, James, and good morning, everyone. I and my colleague Nick are delighted to be here today to talk to you about some of the challenges that we're seeing from our clients around governance and how we've been able to support them and think about what comes next. So Phoenix Corporate Investment Services, or I'm going to call it CIS, otherwise it's going to take all day every time I say it. We are part of the Phoenix Group, which is the UK's largest long-term savings and retirement business. We specialise in helping people achieve a life of possibilities, and we have over 13 million policyholders with around 300 billion in assets under administration. And that's all in a business that is committed to a responsible and sustainable future. We in CIS are an investment-only platform that delivers bespoke investment solutions to some of the largest DC, DB and Master Trust clients in the UK. We have over 20 years experience in doing this, and clients work with us due to the range and complexity of the investments we offer, from target dated funds to exchange traded funds to blended hierarchies of white labeled funds, all of which is delivered through the end-to-end automation of our platform and with our on-hand expertise and experience in safely restructuring clients' assets as their investment requirements continue to evolve, as we all see, and this is all backed by the financial might of the Phoenix Group. So when we speak to our trustee clients currently, governance and how to report on it keeps coming up time and time again. Demonstrating a good governance with robust controls, accurate record keeping, and detailed information for members has always been the cornerstone for any good trustee board. And whilst we all in the industry, from trustees such as yourselves to providers like us to the regulator, we're all focused on ensuring and delivering good outcomes for members. The challenges that we're now seeing from our trustee clients is from the recent changes, and some of the changes that are yet to come have clearly put the spotlight more on governance and how we demonstrate it. So if good governance is what we're all aiming for, but how to demonstrate it, report on it, and what does that reporting actually tell you in terms of what comes next and when is change required? Investment-only platforms such as ourselves can help with this. Platforms can support you in the gathering and consolidating of data, both ongoing and at the point of change. And Nick will talk about this in a bit more detail later. But platforms can ensure that trustees have access to high quality data to monitor schemes' investments and to help guide decision-making and reporting to members. Investment-only platforms should offer you a robust governance framework that provides the data and the reports that you need. So if we can move to the next slide, please. What does good governance actually look like now as we close out 2021 with the various regulatory changes we've recently seen? But what we're seeing from our clients, it isn't just about compliance with the regulation. It's about proactive trustee boards wanting to look after their members and their pensions. We see that our clients are wanting to ensure that they have access to the right information to monitor and review the impacts on all aspects of their scheme, that it's reporting as it should and as they expect, to give comfort to them, and that therefore can give that comfort on to their employees and ultimately their members. Can I just check? I thought somebody said there was some issue with my reception. Can people hear me all right? Is it all right, James? I'm just conscious that I saw a comment come up, there was a problem.
It's fine at mine, Jess. So let's hope that Anne, who's posted, has just got an isolated problem. So yeah, carry on.
All right, lovely. Thank you, James. Good. Okay, thanks. So good governance. So we start in the top left-hand corner of our pie here. It is the assessment. What do you need? And clarity around those requirements, either mandatory or for regulatory purposes and compliance, or elective monitoring. By working with your legal and investment advisors to ensure you understand what is needed. And I think perhaps more importantly, why you need it, because what comfort or confirmation will that information actually provide you with? Next, as we move across, it's whether it's transaction cost data for your chair statement, or voting data for the implementation statement, or indeed data on your sustainable investment objectives. Part of the challenge for trustees is getting ready access to the information that you require and that the regulators expect. Where will you source the data from? Or how many sources might you require for comparison or further validation? Can those sources deliver in the timeframes that you set to ensure in particular that you can meet your regulatory obligations? And once you have that data, what does it actually tell you? Does it encourage you to make change or to challenge current deliveries? Now, planning for the future can cover a wide range of aspects, from the performance of your funds to reviewing possible sustainable alternatives of current investments. And this is what we've seen from our clients in both DC and DB, that there is what they're working through at the moment. They're balancing the needs of their schemes versus around the beliefs and the asks from their employers and their members. Costs and charges data will help that review that you're getting the best value for money across all of your suppliers in your value chain, whether that be your funds, your administrator, or indeed your provider. And finally, it's the making that change happen in a way that's demonstrably in the best interest of your members. Are there ways to minimise costs or out of market exposure, reduce blackout period for members, or indeed the impact on your administrator? Now, as Nick will discuss in a bit more depth later, working with an investment-only provider can help in the planning and the implementation of change, as they will do all of those heavy lifting for you. So that's just a quick start in terms of what we're saying, but now we'd really love to hear from you. From the wide range of information that you need for your governance, reviews and reporting, what is the most challenging you're currently finding to source? James, I think we have a poll question here, please.
Yeah, I think we've got a poll coming right up. There it is. Jess, thank you very much. So the question is, which of your reporting requirements currently presents you with the greatest challenge? And just choose one of these, please. So the options are meaningful fund performance data in a timely and consistent format, obtaining transaction cost data for the chair's statement, reporting on sustainability, ESG, and the impact of your investments, voting data for the implementation statement, or the final one, monitoring the performance of providers through SLAs, etc. So quite a few questions. I'll run through those very quickly again. Just choose one. Which of your reporting requirements currently presents you with the greatest challenge? Is it meaningful fund performance data in a timely and consistent format, or obtaining transaction cost data for the chair's statement, or reporting on sustainability and the impact of your investments, or voting data for the implementation statement, or is it monitoring performance of providers through SLAs, etc.? And I think that you've probably all voted just about by now. So there are the answers. By magic, we've got the answers. And overwhelmingly, just very interesting, 76% have said that the biggest challenge is reporting on sustainability and the impact of your investments. Jess, is that what you would have expected?
Yes, I think so. I think because I think it's a bit of a moving target at the moment. We're seeing this from our clients as well. It's that what is the standardized market approach to that reporting, and how you're going to be able to source that information from fund managers or data vendors. So I have no surprise there that that's particularly as schemes are trying to evolve in terms of getting sustainable and responsible investments on the table for their members, how they're going to be able to report on that and get their carbon data out. So no surprises for me there. Thank you so much, James.
Okay.
Nick, please.
Thank you, Jess, and good morning, everyone. I think we all recognise that the expectations around the level of governance that is needed from trustees has significantly increased in the past 4 or 5 years. And our polling questionnaire demonstrates that with added responsibilities around sustainable investment and its associated reporting, that governance is only going to increase in the coming years. What I'd like to take a look at is some of the data and reports that are required by trustees. And some of these can be very different indeed. So for example, the voting data that's needed for the implementation statement will require a very different method for collection, collation, and review by the trustees, as opposed to perhaps reviewing regular quarterly fund performance, for example. This, by the way, is not a section that will sort of look at every aspect of legislation quite clearly to cover everything that's applicable to the trustees of DB, DC, and master trust schemes. We probably need a whole afternoon to cover some of the legislation. So it's really entirely designed to look at those areas where a platform can certainly help trustees and what some of those key requirements are. So looking at some of the data that's required on the left-hand side of this particular slide, we've got some fairly basic reporting requirements there that we tend to see on a regular basis, such as valuation statements needed by trustees and their administrator and their auditors, for example, and also transaction statements. So things like how many fund switches are taking place, what units are being purchased, the sale of units, etc., and flows in and out of schemes by way of investments, disinvestments, etc. But I think perhaps more meaningfully, we begin to move on and look at how fund performance is collated for trustees and how that's also analysed as well. Many of you as trustees will have more than one underlying fund manager. I can think of one particular scheme that has about 20 different underlying fund managers, and clearly to collate that performance from several underlying fund managers could be a challenge to that scheme in isolation. But as a platform, we can collate that data. So whoever the manager is, we can then collate it and present it to the trustees in a single consistent format. And why is this important? I think firstly, it's using the same valuation points. Different funds, some will be midday valued, some will be close of business valued, but let's make sure that we are presenting that at one single point in time, that the benchmark performance matches the timing of the funds as well, so we don't have a mismatch between benchmark performance and fund performance. But also the trustees also have the option of different reporting needs that a platform could help with. So for example, we have some schemes that want, in addition to net performance, they'd like to see gross performance as well, and the effect of things like the annual management charge and fund expenses on performance in percentage terms. And that same consistency is needed for member reporting as well. So whilst not directly related to trustee reports, it's vital that the trustees know that their members are getting this information, again, on a consistent basis, based on the prices that those members receive. So we're not dealing with mid prices, it's the prevailing price that members buy and sell their units at, on which we report fund performance, reflecting the actual charges that the members pay, so not generic fact sheets, but also where blended funds are being used, aggregating that data so members can look through and say, okay, I might be in a blended fund, there might be 4 underlying funds, but I want to know geographically, where am I invested, which sectors am I invested in, etc. And then the next level of that is making sure that information is available online and gives members the opportunity to compare and chart performance of different funds. So actually, those members perhaps are more actively involved and are self-select members, can they compare 2 or 3 funds and their performance over longer time periods? We then move on to some of the more recent legislative changes that trustees have had to manage. I start with the chair's statement, which has resulted in a need from 2018 to provide transaction costs within that chair's statement. Again, citing that example of 20 different underlying fund managers, that can be quite an arduous process. Going out to each manager, they all have their methods for returning that data. The format can be quite different, but a platform will take, as well as liaising with each manager, will take that data in, provide it into a consistent format for the trustees. And again, where we've got blended funds here, what's important for the trustees is to know ultimately what's the overall transaction cost for that blended fund. But if I see a transaction cost figure for a blended fund, I then want to know which of the underlying components is driving that figure. So again, I could have 4 underlying funds, 2 may have no transaction costs whatsoever. I want to know which 1 or 2 funds are driving that level of transaction costs, and that's what a platform can provide to the trustees. We then move on to another change, not actually on the slide, but the Statement of Investment Principles from October 2019 had to include the trustees' policies on financially material ESG factors for DC schemes. And there were some requirements there for DB schemes as well. Again, not something that we as a platform heavily get involved in, but it's another example of legislation and changes trustees have had to factor in. We move on to October 2020. The implementation statements that required voting and engagement data to be published by trustees, including any significant votes being undertaken by managers. And Phoenix as a platform will undertake that heavy lifting on behalf of the trustees, going out to managers, collating that data, and again providing it to trustees as and when needed. I look at some of the other requests, perhaps more long-standing, so things like audit requests. Again, different audit requests will require different pieces of information, but AAF reports that investment platforms provide can certainly help in this respect, showing that an external auditor has come in and provided reassurance over the robustness of controls and processes used by a platform. So these can answer audit requests, but also around things such as authorization of master trust schemes. We found the AAF report to be extremely helpful. And then I sort of look at other requirements. Whilst not strictly a governance reporting requirement, the relationship that the platform has in place with fund managers is critical, and that fund manager governance and the legals that take place, we're very open in terms of how those relationships work. So we will have a fund link agreement in place with every external fund manager. That provides protections to the trustees around things like indemnities, even gathering reports for things like transaction costs. It also allows us to add any new funds in the future. And in addition to that, we will undertake operational due diligence on those fund managers. And then I look to the future, and I think there's already legislation that we're aware of that is right here now with us in Q4. So value for members assessments, this is now affecting those schemes with less than £100 million worth of assets in DC schemes and have been operating for 3 years. And these schemes are now having to show that they offer their members value for money in areas such as costs and charges, investment returns, and governance and administration. So that's one from December 2021 that's coming into force. And clearly the task force on climate related financial disclosures, TCFD, I'm sure we are all aware of. We are currently looking at how we can best support trustees with their requirements. Those schemes with 5 billion in assets as at March 2020 are in scope now. Those schemes with 1 billion as at March 2021 will be in scope next year. And we are working very closely in partnership with our clients to see how best we can help them. So whilst I'm not saying this is exactly what we will do, for a platform, it's all about how we can help our clients with these requirements. And it's not going to stop there in terms of future legislation. We've seen a lot in the press about carbon metrics. We've seen an FCA consultation around the labelling of sustainable funds. So I completely understand why in our poll, sustainability reporting is going to certainly present us with some challenges. I think this is probably an opportune time to look at our next question, because next polling question, because having looked at some of the requirements, what do you as trustees plan to take in terms of action, and what actions have you taken? So James, if you're happy to run through our next polling question with our viewers.
Very happy to, thank you, Nick. So let's see, we've got a question just come up. After your most recent governance review, what was the primary action your scheme took? So again, just choose one of these, please. So the options are increased engagement with fund managers on voting, or negotiated improvements to costs and charges, or de-risking stroke asset allocation changes, or introduce sustainable investment options, or other. So I'll quickly run through those again. After your most recent governance review, what was the primary action your scheme took? Was it increased engagement with the fund managers on voting? Was it negotiated improvements to costs and charges, or did you do some de-risking or made asset allocation changes, or perhaps you introduced some sustainable investment options, or something else that you class as other? So let's see the results. There they are, a bit more of a mixed bag this time, Nick. So 19% for increased engagement with the fund managers on voting, 15% negotiated improvements to costs and charges, 35% is the most popular one. So quite a lot of people did some de-risking or changed asset allocation. 15% only introduced sustainable investment options, and over 15% did something else. So de-risking, changing asset allocation, is that the kind of action you would expect to flow most significantly from this sort of governance review, Nick?
To be honest, James, I'm probably a little bit surprised by the poll. I think when we looked at this initially, sustainable investment has been certainly a hot topic. We've seen a lot of changes to introduce sustainable investment options. But I think the overriding factor here is I'm delighted that the trustees are looking at the data they're receiving, undertaking their governance, and actually making and taking positive action to drive better member outcomes. So I think all of these things are certainly viewed as positive. Great to see a spread there of different actions that the trustees are taking, and I think it just shows that the focus isn't all about sustainable investing. It's about other aspects of scheme governance that can be improved as well. I'd like to move on to the next slide.
Absolutely.
But before I do, I think just a couple of points I'd like to raise. Firstly, just a quick mention to Pat Turner. Pat quite rightly has said, I would have liked to have ticked more than one box. So I think there's probably a learning point for us there with future polling questions to allow people to select more than one answer there, I think, James. And we've also had a question in from Alan Williamson, and Alan asks an excellent question here as to why periodic reviews of decisions are not reported. So I'm assuming here, Alan, we're looking at, when making a change, which funds do we choose, perhaps having a short list of potential funds, and then post that decision looking at the performance of those funds. And I think that's absolutely a great idea for people to undertake. But the one thing, of course, is that performance isn't necessarily the sole factor in terms of whether a choice of a fund has been good. And particularly for DC, it's understanding the volatility, the impact that volatility might have on members as well. And I know that there have been providers out there that haven't necessarily wanted to go for high growth default strategies because they're concerned if there is volatility, will we then get an increased number of opt-outs, for instance. So, but you're absolutely right, Alan. I think if we have a criteria for making a decision, then to review that decision, post the decision, say, have we got this right, is absolutely something the trustees could add to the level of governance they undertake. And that question brings us nicely onto managing change and some of the steps that trustees should walk through when making change. Firstly, through a platform, the trustees have an extensive choice, not just of funds and ETFs, as the slide suggests, but other investment vehicles. For DB schemes, it might be segregated mandates. Potentially, you could be looking at investment trusts or indeed target dated funds for DC schemes. As a platform, we have relationships in place with roughly 70 external fund managers. We have those fund link agreements and legals in place, so funds can be added quickly for the purpose of meeting trustee objectives. Having then chosen our funds, what's quite important, what's essential really, is that if a trustee has secured better terms with a fund manager than the platform, we as a platform can ring fence those fees solely for the benefit of that particular client. But also, if you've got millions and potentially hundreds of millions flowing into a fund, it seems remiss that we don't approach a fund manager and negotiate on fees. So again, a platform will say, we've got an extra flow coming into one of your investment strategies. What are the best charges that you can offer us and our clients? So we've got to a position at this stage where we've agreed the funds to be used. We've agreed the charges. The next stage is to look at how we can effectively move money. Let's take a simple example from Fund A to Fund B. There are a number of different transition methods that could be used. If we're moving money between providers, we could re-register units, taking cost and risk off the table. And that ultimately will be the #1 objective for trustees when making change. Can we do it at minimal cost with minimal risk? In specie transfers, if we have two funds where the underlying stocks of those two funds are similar, we can utilize in specie transfers in moving assets from one fund to another, again, taking cost and risk off the table. But there's every chance that when we make a change, and we saw it earlier in our poll, we're making asset allocation changes, and where we're looking at funds where the asset mix is different, we're probably looking at a cash transition. Phoenix will pre-invest, so we will sell the old fund and buy the new fund, matching the valuation points to eliminate outer market exposure or double exposure as much as we can. And if there's a need for prepayment of that purchase leg, we will again pre-fund, and we've pre-funded for a couple of clients to the tune of hundreds of millions of pounds at no cost to the client. And this is a scenario where we don't get the proceeds from the outgoing fund manager in time to pay the new fund manager. So we can help with that as well. So we've now got to the stage where we've chosen our funds, we've agreed fees, we know how we're going to transition the assets, but it's so important when managing change that the trustees know what it is going to cost them. So we will undertake pre-transition cost analysis. We will look at fund spreads. And there's a possibility here that our two funds, Fund A and Fund B, there is little between them in terms of cost, but the transaction costs in moving may influence the decision of the trustees whether to go ahead with that. So Jess said we wouldn't provide advice earlier. My advice to trustees would be, however, whenever making change, know what it is going to cost in terms of transaction costs. There is then the legal documentation between all parties. When looking at legal documentation, I think the trustees, as we use more complex transition methods, are worried about the level of documentation. With a re-registration of units is simply an agreement between the old provider, the new provider, and the fund manager. So again, there is no requirement for the trustees to review that documentation, and the same applies for an in-specie transfer. So we do that work for you when making change. But most importantly is clearly a clean execution of that transition plan. It's important at the outset to agree the project through the project initiation document. What are we trying to achieve? Who are the stakeholders? What are their responsibilities? What actions will they take? And then all the way through to the end point where we're having go, no-go calls as to whether we're to go ahead with that, knowing what those trades are going to be and placing those successfully. And it is all about delivering on a plan and providing good outcomes for members. And I picked up on this topic in particular. There's several aspects of governance, but we meet so many trustee boards looking to make change that the framework for good governance goes beyond just reporting data. It is about applying that structure no matter what changes you as trustees are looking to make. So over to you, Jess.
Thank you so much, Nick. If we can move on. So in summary and to close before we get some more questions, governance is the systems and processes concerned with ensuring the overall direction, effectiveness and responsibility of a scheme. Good governance ensures compliance with regulation and law, but also that a scheme is efficient and well run and has a framework to ensure it's accountable to its members on the decisions that it makes, particularly when it comes to making change. It ensures that data is accurate and delivered with validation, and any problems are identified early and dealt with appropriately. It works to preserve the reputation and integrity, not just of a scheme, but of our sector in its entirety, because bad governance surely gets that spotlight too. So, but good governance, the requirements of it doesn't change, but the demands of demonstrating it and validating it is evolving, as we're now seeing. We see with our clients that the investment-only platform can help ease some of that burden on trustees, because governance is only as good as the information and the data that supports and verifies it. The investment platform can be that consolidator of information gathering. It can work on your behalf as your advocate with fund managers and suppliers, so we can ensure that we can get the best possible quality of data for you in a format that works for you and offers the most value for your governance needs and your reporting to members. We can ensure that that data is bespoke, meaningful and relevant, and can be compared to to Alan's point earlier, because we have that wide market review, we can compare it to other funds that are out there and to give you that real data that you need to ensure that you can deliver in terms of the decisions that you have made. Now, clearly, further standardization will continue to evolve as clients use data to make informed decisions about future strategy. But platforms are well placed and positioned to evolve with those changing needs to support both future needs and asks of either the regulation or the trustee clients themselves. So, James, that's kind of the end of our formal piece of presentation. Do we have some questions, please? Or do you have any questions, James?
For a moment. Thank you, Jess. Alan Williamson's the sole winner of a prize for questions at the moment, I'm afraid. So we're just waiting for some more questions to come in for our audience. So folks, do fire them in the Q&A box because otherwise you've got to listen to me ask our panelists some questions, I'm afraid, and I'd much rather put the audience these questions. So while you're all thinking, let's dive into one or two issues, and perhaps Jess, to you first, because you made Nick do a lot of talking in that presentation, but he did run through a lot, amazing variety of governance challenges that trustees are now facing, and of course you've explained how the platform can help to sort of to consolidate, to pull together reporting of those. Jess, what do you think is the hardest of those governance challenges that trustees are facing?
Oh, good question, James. So I would say it's sheer volume of consultation and ensuring regulation that we've seen, particularly if you look, I would say over the last 12 months, but even if you look in the last 3 months, the sheer number of consultations we're getting out from the DWP, it can seem to be overwhelming, because they each require the time and the expertise for interpretation, feedback, if you're going to feed back to the consultation, and ultimately implementation as and when it becomes regulation. An example, even just today, we've seen new regulations coming into force today for trustees and scheme managers, so they have the greater powers to intervene in pension transfers to challenge the growth in pension scams. Now, while obviously it's a positive move for additional protection, the challenge here will be for that red and amber flag system. It's going to be substantial for trustees because it requires speedy implementation, and it works all the way through that value chain for trustees. So from the admins that you have set up, from your systems, your internal controls framework, to ultimately how you communicate with your members. So I think that's the point for me, is that the challenge is always ensuring that you get have the time and the ability to respond to the consultations that impact you and your scheme, but then also dealing with the regulations that follow to make sure that you have the most robust framework in place to support them.
Yeah, I very much agree with that, Jess. Pat Turner says, slightly controversial question. I'm not sure what that was referring to, but I think we've now got a clarification. Thank you, Pat, who says, looking at the current and incoming new regs, which ones do you think will add most benefit to pension savers? And which do you think add the least benefit? Perhaps, I'm not sure, Jess or Nick, which of you wants to take that one? Jess, you fire away.
Okay, I'll make a start and then I'll see what Nick says. I think the value for member, I think, is going to be particularly useful for pension savers, to really get an understanding of what your investments mean for you, and the value of those investments, I think, will be key. And so for me, I can foresee for individual members, that is something that gives them a real tangible benefit to what they're doing.
Yeah. Okay. Thanks, Jess. And Peter Voss has fired a question in, saying the role of trustees on DC schemes is new and evolving. That's true. Has the old DB approach to good governance been tweaked adequately to provide good governance for DC members? I'm not sure, Jess, if that's one for you or perhaps for Nick.
Yeah, I'm happy to pick that one up, James. And I think there's probably two comments I make around Peter's question. Firstly, it's the legislative requirements of trustees, but which I'll come on to in a second. But I think secondly, the importance and good governance is very much down to those individual trustee boards. And are those trustee boards, we've talked a lot about data today, we've talked a lot about reports, but it's the actions that those trustees take and the thoroughness with which they go through things. And I take, for example, transaction costs. Remember, they came in 2018, we had a conversation with fund managers. There were plenty of people in the industry scratching their heads about how much benefit will this provide to members? Will members ever look at this within the chair's statement? And I would say it's not really the member's job, but it is the job of those DC trustees to look at the data and ask themselves, if we've got a situation where we've got lifestyle switching going on and it's costing 50 basis points or 0.5% in transaction costs every time we move between funds in that lifestyle strategy, is that something that we as trustees are comfortable with? So I think the answer, Peter, is the requirements have added and will only improve governance, but it's very much dependent on what the trustee boards then do with that data.
Yeah. Thanks very much, Nick. That's great. And Alan Williamson is trying to keep ahead into the question stakes of his second question. Alan says, do you think there is too much accountability now being placed on trustees? Is there a tipping point? Particularly he's thinking of those trustees who undertake their duties on a voluntary basis. And I must say, I've got a lot of sympathy with what Alan says from the conversations I have with schemes, chairs of trustees. People are plucked from the shop floor, from their desks to be a member nominated trustee. A lot to take on. So, is there are we now asking too much in terms of the accountability of trustees? So, Jess, is that one that you want to pick up?
Yeah, I agree. I have a lot of sympathy. I've seen it. I mean, and I've seen this with our trustee clients. So where there are clients that have the resources to have in terms of meaningful interactions with investment consultants, or where they've got in-house expertise, then clearly that they can roll with the punches, particularly. But you're right, where you have member nominated or union nominated trustees, it's a real challenge here, because it's where it's very much pushing in terms of those trustees. What do they have to be experts in, and how are they going to get access to the information to make the decisions that they need? And I think that's from a wide range. It's not just about doing the right thing, but it's also becoming experts in the future that we want. For example, with sustainability, and you look at TCFD as a perfect example. I have a lot of sympathy with trustees to think, where are we going to get the information, and how can we get the support? And so that's one of the ways I think I know you're talking about investment only, but I think we can help utilize that because we have that wide range of clients, both DC, DP and Master Trust. We're in a position where we would always look to support trustees because we appreciate that there is an awful lot now that they're having to become experts in very, very quickly.
Yeah, I just want to get back into one or two more specifics in the last sort of minute or two we've got for questions. And Nick, you were talking about schemes that have got maybe 20 different fund managers, not uncommon, I know. I mean, how long are those fund managers taking to provide the sort of transaction cost data and so on that trustees need? Are they all doing it in a timely fashion, do you think?
I mean, I think, James, the service standards, whether you just determine whether they're good or not is another matter, but they are fairly standard now. I think when this was introduced in 2018, we were feeling our way and timescales from manager to manager varied significantly. Now, I think it's fair to say that every single manager will provide their data within a quarter of the quarter's end. So if we want Q2 transaction costs, they're available by Q3. And clearly in that instance, we would take that data and say, well, we've got some blended funds here we need to calculate for. We've got some inconsistencies between how it's presented. So we put it all together into the one consistent format, do our work for blended funds, and that's available 3 or 4 weeks after the point that the external fund managers make it available. But at least, James, we know those timescales. Normally the chair statement's needed 7 months after the scheme year end. So we're typically able to provide this in a fairly, I say timely fashion. One might say 4 months is too long, but at least we know those timescales and can manage the expectations with trustees.
And just to add to that, I would just say one of the things that we're seeing, because we work directly with fund managers, we don't work with data providers, vendors, we do it all ourselves in-house. One of the things we're seeing is quite a high level of data coverage, because often it's not just how long things take, it's how much data coverage you get. Now, we're confident sort of year on year of a 98%, but even in the last quarter, where we're collecting data more regularly, quarter on quarter, this last quarter we had 100% data coverage from our transaction costs. So it goes to show you that we are getting there, and both us and managers in terms of getting the validation of data.
Yeah, thanks, Jess. Let's just have one last question from Pat Turner, who asks, with the growing burden of governance and compliance, do you think it's now very likely that small or medium-sized DC schemes, less than 500 million AUM, will start to switch to master trust or contract-based schemes? Isn't this an unwritten intention? And if this happens, is it a good thing? I'd love to answer this myself, but Jess, I think I better let you have a go.
It's a good thing for the right schemes, I would say. I think for me personally, my personal opinion, I think you can get extremely well-run small schemes that are well-governed schemes. But I think there is that, clearly the government, there is that kind of push now to kind of for that consolidation and to utilize master trust. I think it comes down to each scheme and knowing their members and knowing the investments they want their members to get access to and the governance requirements of that. What's your thought, James?
Well, my thought is that it's not something we're going to see more of. We're already seeing more of this. Certainly when I speak to scheme managers, many of them or a decent number have already made a switch across to master trust, and quite a lot are thinking about it. And I'm sure that the future, certainly on the DC side, is going to be fewer larger schemes. So the master trusts, they're playing an ever more important role, and that may be a good thing. They're mostly tremendously well run. So yeah, but as you say, it needs each scheme to think about what's right for its members. Yeah. Well, I think we better sort of start to draw things to a close on that note. Thank you very much indeed to Jess and Nick for great contributions, taking lots of questions as well. That's been much appreciated. And thanks to everyone who's dialed in. We had quite a good attendance today. There will be a feedback survey. I think it comes up on your screen at the end of this. So do please fill that in. We will, as I mentioned earlier, be circulating the slides and the recording of this within the next 48 hours or so, and the video will be on our website as well. So if you want to watch it again, or maybe share it with your friends and colleagues. I just want to give a quick plug for some of the conferences and events we've got coming up from the PLSA next year, as we make the move back towards doing some of our bigger events face-to-face, Omicron permitting, we hope. So we're going to have our ESG conference online on the 9th and 10th of March, so that's a digital event. But then our investment conference, which always used to be in Edinburgh in March, is now going to be in Edinburgh in May, the 25th to the 26th of May. So that's our first big sort of face-to-face event. We'll have our local authority conference, specifically for our LGPS friends, back at the Cotswold Water Park, 13th to the 15th of June. And then our annual conference will be in Liverpool next October, 12th to the 13th of October. So some dates to put in your diary. Those are all on our PLSA website as well, or drop me a line. So at that point, it only remains me to thank my colleagues behind the scenes who've been helping with this, Rebecca and Elliot and Molly, to thank Jess and Nick particularly for speaking, everyone for dialing in. Thanks everyone, and enjoy your day. Bye now.